All right, so what I'm going to talk about in this video is how I was able to go from an eval to a payout within 48 hours using the Lucid Pro, not Flex, but just the Lucid Pro accounts. And I'm also going to go over the trades that I took to pass the evals and to secure the payout in general. So going into the first trade, which was the one that passed the eval, we had this manipulation swing on the 1 minute. Let's go to the 1 minute right here, and this whole swing right here, and it gave us -2 levels here and then -4 levels here. We also have these lows right here that are pretty close to the -4, and this is all inside of a new week opening gap, so I was fairly confident in taking this. So you can see that my entry was based off of the 5 minute inversion. It was a pretty classic entry, I'm not gonna lie. Did we even go into discount this whole range or premium? Yeah, so we tapped the equilibrium of this range here, rejected away from it, inversed this gap, and I thought that was a good sign to take shorts, so I took shorts down to this low right here, which is close to the -4. And that was pretty much it. I was able to pass the account in one trade within PM session, and I was also able to secure my first winning day in that same exact session. So after we tapped this -4, you could see that I have this manipulation like marked out right here as well, and it's from the 1 minute chart. So let's go back on the 1 minute, and yeah, right here. So I marked out this manipulation swing, and we get this -2 to -2.5 zone right here. So I'm thinking, okay, if I wanted to take a short in this level, is there any PD array or anything that would make sense for us to take the short? Because again, you can't just trade these levels blindly. And there actually was. So we had a 15-minute unfilled bearish fair value gap that we had tapped right here, which is inside the -2 to -2.5 zone. We had a pretty good 15-minute closure that tells us that we could potentially reverse from this level right here. And now if we go down to the 1 minute, we could see that we also got a 1 minute inversion after tapping into that 15-minute gap. So as soon as I saw that, we inversed this gap with decent volume, took the entry right here, and stop loss at the high right here. And yeah, that's pretty much it. I will say that if it wasn't for the market closing at 4 p.m., I probably would have held this trade all the way down till here, or maybe even down till here, which is pretty crazy to say, but the confluences were there. So, and the reason why I even bring this up here is because I'll talk, this leads into how I took my second trade, because it was based off basically the same exact thesis because of how confident I was in the short idea. So, moving on to this trade here, this was more so based on the high time frame. My entry was based on like the 30-minute chart, but this was the same exact day, but Asia session. So the second trading day. And we could see that if we go on the 30-minute chart right here, we had swept this high into this 15-minute gap, which gives us good reason for us to catch continuation entry, essentially based off the same thesis. And we get this really big displacement candle. Ideally, the reason why I even have this equilibrium marked out right here of this distribution leg is because I wanted to catch my entry based off of a rejection away from the premium of this distribution leg down towards these lows here. However, after seeing the way this 30-minute candle closed and the 15-minute as well, this just looked like it was ready to go without me. So after noticing that, I went down to the 2-minute, and let's see right here. Let's just remove this. We have this inverse right here, which also acts as an order block as well. So I essentially just took the low time frame entry based on the retest of this order block down to this low right here, and I was able to catch 125 points, about 1.7 R, which isn't too bad. And yeah, for a trade like this, that's more so based on the 15-minute, 30-minute chart. I could have most definitely held it down till here, maybe even the weekly open, because price likes to draw towards weekly open, daily open, and stuff like that. So that was a mistake on my behalf. But for 125 points, you can't really complain. So by 9 p.m. on Monday, keep in mind, I bought these accounts at 1 p.m. the same exact day. So 1 p.m. I bought the account, I passed it. Then that same session, I was able to book the first winning day. And the very next Asia session, which is all in the same day, I was able to book my second winning day. Now all I need is one more winning day and I can secure a payout. So moving on to the trade that actually secured the payout, we could see that on the lower time frame, we were this right here, clear accumulation. This right here is clear manipulation, considering we dumped aggressively, took out the accumulation lows, and then also swept this low right here. And right after we swept that low right there, ideally what you want to see when you're playing an AMD type of trade like this is sweeping some type of low, manipulating into some type of significant level. In this case, it was this low right here. And then waiting for some type of displacement in the opposing direction. So in this case, you could see that we dumped aggressively into this low right here, especially with a candle like this as well, where it's super bearish and we quickly recover from that. A lot of people are probably just FOMOing into shorts based off how aggressive this candle looks. So for us to recover from this candle, inverse the gap right here, that was a good sign to take longs back up to these consolidation highs. So that's exactly what I did. As soon as we inverse this gap, I was waiting to see if the displacement is going to continue, and it did. And I took my entry right here, targeted this high, and yeah, that was pretty much it. Another reason why I really like this trade idea as well is because this line that I have marked out right here is the daily open. So this will act as a price magnet for price to draw towards. And considering that we're in, like if we look at the daily chart, we're consolidating a lot. Something I always preach is when we're consolidating like this, something like that, let's say, ideally you want to be shorting anywhere here and longing anywhere here. And that's exactly what I did. So the high time frame context is in alignment with my low time frame thesis, and that's exactly what I like to see. So going back to that same trade, knowing that we're consolidating and right now we're in the deep discount of the consolidation, ideally you want to wait for longs. So yeah, that was pretty much it. So daily open, power of 3, deep discount of the daily range, good displacement, inverse. It was a pretty clean trade. So now moving on to this next trade that I took here was actually to pass 2 more pro accounts. So you could see here, let's just zoom out a little bit. So yeah, right here, you could see that we formed this manipulation swing right here, which is a clear one in terms of just the pattern, the way it looks. I actually wanted to take longs off of this 30-minute gap right here, right? But once I marked out the manipulation swing, I was kind of thinking there is no significant projection in alignment with that first gap. So I think I have a better chance of just waiting for a reaction at the -4, which is perfectly aligned with the beginning of this 30-minute gap right here. And it's also a 15-minute gap as well. So that's exactly what I did. I waited for us to tap into the -4, which also means that we would tap into the 30-minute gap. And I waited for a significant reaction, which would have been this candle right here. Pretty sure I took my entry right after that. Got filled in right there. Stop loss at the low. And my TP was, yeah, still Wednesday. So my TP was the daily open of Wednesday. And not necessarily the daily open, but close to the daily open, because again, it acts as a magnet for price to draw towards. As you can see right here, when the reversal started to occur here, we draw it exactly towards the daily open, and then we dumped away from it, and then we drew back to it. It's perfect. And yeah, that was also to pass another two accounts in one trade. So then going into Asia session of the next day, we started to range a lot in this range right here. So I was thinking, okay, based off of this 5 minute manipulation swing prior to the reversal, which means it's a high probability standard deviation markup, we have this -2 right here. So it would make a lot of sense for us to retrace back down and rebalance some of these gaps right here, right? So that was kind of the thesis I was playing off of. But however, it didn't work. We got stopped out, and it is what it is. You're going to take losses along the way. So you can see right here, this is a clear chop. I'm pretty sure somewhere here there was a, yeah, 3 minute gap inside of a choppy range, and you're shorting the discount of that, which means you're positioning yourself fairly well. Again, if we're chopping like this, ideally you want to be shorting here and longing somewhere here, or protecting yourself somewhere here after shorting up here, or vice versa. So for example, I took the entry off of the 3 minute gap right here, and the daily candle just formed. So this was right around 6 p.m. And the way I was kind of looking at it is initially I wanted longs anyway. However, I was thinking it would make sense for us to put in a small wick on the daily candle by forming a minor retracement. So what I was thinking is something like this. Take out this low, maybe tap into this gap right here, and then continue going higher. However, that did not work. So right after taking this loss right here, I was thinking, okay, now we're displacing super aggressively and we're displacing towards the weekly open. And when I was looking at the weekly candle, it looked to me like it wanted to flip bullish again, which means trade above this level right here. So as soon as I saw us displacing towards it, I took my entry right here towards this level, and I had my stop loss at this low. It was a 30-minute low, I'm pretty sure. Yeah, 30-minute swing low. And this was a trade really just based on the higher time frame, trying to target this -4 of the 5-minute swing right here. The reason why I liked this -4 in specific was because it was in alignment with this NWOG on the daily chart. So let's go to the daily right here. You could see that this yellow zone that I have marked out is a new week opening gap all the way from May, but it's still valid. Price will draw towards it anyway. And I'll go over kind of how I learned this right after I go over this trade as well. So again, I saw us displacing towards the weekly open. I was thinking, okay, the weekly candle might flip and we could get a pretty significant move since we're playing based off of a weekly thesis. So I took my entry right around there. I had my stop loss at the swing low. And the reason why I also like the stop loss at the swing low is because the daily open is within my stop loss. It's not under it. For example, if the daily open was somewhere here and my stop loss isn't accounting for that, then I would have likely gone stopped out, because again, price likes to draw between or draw towards daily open or weekly open. In this case, we have the daily open and the weekly open close to each other. Another thing I also want to bring up about that is when we're trading between two opening prices, we're very likely to chop, because again, if one on the higher end acts as a magnet and the other one on the lower end acts as a magnet, they're just going to be trading in between them, and that's exactly what happened here. So I placed my stop loss at the swing low, which accounts for the daily open. And I ended up getting super lucky, I'm not going to lie. I think it edged me by this low right here is 395, and this low right here is 396.5, so 1.5 points. But yeah, so I took my entry based off 30-minute chart, made sure that daily open was within my stop loss, and it was essentially just betting on the weekly candle flipping and us trading towards this NWOG all the way back from May on the daily chart. And again, the reason why I liked it is because there's a -4 inside of it as well. But I will be honest, I woke up at around 8 and I just moved my limit down from this -4 to about 2 or 750, 760, something like that, right above this high. And that's because I just really didn't want the market to open and just dump right back to my break even and just round trip the whole position, because I was in this trade from 8 to 8 a.m. So I was in this trade for 12 hours, which is really long. But yeah, in terms of all the technicals, that's pretty much it. And this is useless. I didn't take this. But yeah, going over the return on investment that I was able to secure based on how much I spent on the accounts and how much I was able to pull out, we'll go over that right now. So the accounts were 110 times 3, right? Because I bought 3 accounts, which means that in total I paid 330. And I was able to pull out prior to the split 5359. So 5359 times zero point 0.9 because it's a 90% split. That equals 5359 times zero point 0.9, 4823. 4823 divided by the cost of the accounts, which is 330. In 48 hours, I was able to secure a 14.6 return on my investment, if that's the right way to put it. But yeah, I would Lucid, the fact that they were able to remove the daily loss limit on the 50K pro account, it's a game changer, and I really think you guys should take advantage of that. So definitely look into some of these accounts. But yeah, that's pretty much it for this video. One thing I also wanted to go over is how do I know that we draw towards these like new week opening gaps, especially when we're consolidating like this? I'll go over that right now. This is what people mean by screen time matters. So back in this range, all the way from October to February, we formed so many of these like daily opening gaps, weekly opening gaps. And you can see that price is just trading to and away from them. So even like these small ones right here, we're just drawing towards these levels. Again, this one right here, we trade back into it right here. We barely edge it here. There's just so many gaps to trade between, to and away from. So after noticing that, I was actually able to catch one of my biggest days trading away from this gap in specific right here and away from this rejection block. I was able to catch along with about 600 points risk or $600 risk for about 5 KTP per account. But yeah, this is just a clear example of screen time mattering because again, if I didn't experience any of this stuff here, I wouldn't have been able to utilize the same theory or ideology here to frame trade ideas. And yeah, that's pretty much it. So I hope you guys enjoyed, and I hope you guys took away something useful from this video. And yeah, I'll try and post a bit more consistently. I really do need to work on that. But anyway, I hope you guys enjoyed, and take care.